We are back, and today we're going to be telling you guys the exact secret strategy to prevent real estate closing chaos. And we've referenced this podcast for the last couple of weeks when we were talking about what we have called the ultimate addendum, which is part of Premier Coaching. And so what we're going to be doing on today's podcast is we're going to be giving you an overview and we're going to give you, frankly, a little bit more drill down than we have in the last few shows of the things to look out for when you're putting a deal together as pertains to lender's letters. Now, there are a ton of notes, and Julie just scanned the notes on my computer showing me how much she wanted to go through today. And I'm telling you right now, I'm not going to have the...
Not going to happen, is it?
It's not going to happen. There's too much. So if you want all of our notes from today's podcast, make sure you subscribe to harrisrealestatedaily.com. And that is our daily newsletter, obviously. That's the name. And it's the only place where our notes live. So just go to harrisrealestatedaily.com and subscribe to the newsletter. Our newsletter has 22 or 23,000 subscribers now and has usually close to 60% of you guys open it and actually participate in it every single day. So obviously this is something that you're going to want to benefit from, as clearly tens of thousands of agents are every single month. So go to harrisrealestatedaily.com. All you got to do is drop in your email address. And then you got to go over to your main email and you've got to double opt in, just confirm you want the newsletter. And you'll get our newsletter. You'll get that date. Well, you'll get yesterday's podcast, but you're also going to get a lot of exclusive content. And I'm going to give you guys for example. Last Friday, we did was it Friday, Julie? It was Friday.
It was.
Mm-hmm. We did an interview with Keith Jensen about Fannie Mae, Freddie Mac. And some of the things we talked about on that interview had not yet made it into, frankly, I hadn't, the stuff he said, I was learning on this podcast and I thought I knew about the topic. And so just to overview it really quick, Fannie and Freddie are coming out of conservatorship soon, or at least it seems like that they are. No one knows for sure, but definitely appears as they are. And Keith was talking about the fact that a lot of the information that's being passed along ABC, NBC, CBS, and all these other news channels are that's the worst thing ever that's going to happen to housing. It's going to cause interest rates to go up and all these other things. Well, Keith had done a bunch of research on it. And then just today on Housing Wire, the guy that actually worked for Hank Paulson, who was in charge of putting Fannie and Freddie into conservatorship, in essence said that he doesn't think rates will go up either, and it should have come out of conservatorship literally decades ago. Moral of the story is, and you guys got to listen to last Friday's interview, it's going to be a huge boom for the real estate industry because right now, and this is something I learned from the Housing Wire podcast I listened to this morning, in essence, the United States housing finance is about the most socialized housing program on planet Earth, which is the antithesis of obviously the way it should be if we really have a truly competitive market. And the only people that really were trying to keep it in conservatorship, it seems, and again, listen to last Friday's show, it was really fascinating, are the people who are having their bread buttered by the fact that it is in conservatorship. So without going into too much more detail on this, it's a really fascinating topic, but it also creates an interesting opportunity for you to make a really great investment. Keith talked about this on the, again, Friday podcast, so make sure you go back and listen to it. So really fantastic stuff. And that podcast and the YouTube video that accompanies it is becoming one of our, I bet it becomes our most downloaded podcast ever.
Yes, and I do think that that's one that warrants listening to more than once. I am going to go back and listen to it another time because it's so content rich and so interesting. That plus the Housing Wire one today. So you got on that topic because you were reminding them to subscribe to the newsletter, which is where they can find all of this.
Exactly.
Minus the Housing Wire one they got to do on their own.
Well, because you're not, you're going to go back and listen, and you can listen to the podcast, but you're not going to get the notes, and you're going to get the notes when you subscribe to the newsletter.
There you go.
And okay, so my next big announcement for you, Julie.
Yes.
This was my surprise, which you were trying to get out of me earlier.
Aha.
The podcast downloads are up so far 19%.
That's awesome.
Isn't that awesome?
That's great.
So our podcast, we've been doing this since probably 2012, and we have got over 10,000 podcasts now, which is incredible. And to have a podcast that's continuously, that it's not grown month over month. In a couple of years, it was kind of flat. We'd have like 3 million downloads or whatever. But now the podcast is growing again, so it's quite extraordinary. And I think it's because there were great interviews we're doing, like the one on Friday.
Yes, for
last
sure.
Friday. All right, so off to our topic today, Julie. So this is a topic that is near and dear to our hearts because we had to learn all of the things that we're teaching these guys to do the hard way.
Yes, I was actually just thinking about that this morning, knowing that we were going to talk about it today. Every single thing that we talk about on today's podcast, we're not going to get to all of it, we lived through, we learned the hard way. And that's part of why you have an ultimate addendum, is because it is indeed the conglomeration of deal solving, deal correcting, deal saving things with regard specifically to financing.
Let's tell a little story, okay?
Sure.
All right, so we were in our probably second or third year selling real estate. We had been, we'd already sold by the end of our third year, we'd sold well over 300 homes at that point. And for the most part, everything was pretty much textbook. And then we started expanding the area where we were taking listings. We were doing a lot of proactive, prospecting, and we started taking the expireds in this new area, to us anyway, called Westerville, Ohio. And so we listed this house. It was an expired. And then right away, as you'll discover, if you guys decide to chase expireds, you'll discover that a lot of expireds sell right away to the second listing agent or third, depending on the market. So in any event, that just like we expected it to, the house goes in contract right away. And the offer we get is a very normal contract. We weren't, I guess we were maybe veterans by the number of transactions we'd done, but we weren't veterans by the amount of time we've been in the business. So we get this nice, offer. It's from a very, experienced agent in that particular market. Her name was Delina. I won't say her last name. And there was no home sale contingency, but there was a finance contingency. And we'd obviously at that point seen hundreds of lenders' letters. And frankly, we trusted her reputation. We said, okay, that's fine. We put it in contract. So it's in contract to 30-day close, back when things could close in 30 days. And she, her assistant actually, called us and said, well, the deal's not going to close. And we asked why. And she said, well, the buyer's house they didn't sell their house. And we're like, what are you talking about? The deal was not contingent on a home sale. And she said the home sale was, the financing was contingent on the home sale. Or rather, the lender's...
The down payment was coming from the home sale.
Right. So even though the lender's letter did not actually specifically say it was contingent on home sale, or more specifically, the offer from Delina did not say it was specific on home sale, the actual financing was contingent on home sale. And it said... because we didn't get into the lender's letter enough to discover that the lender had used lender speak to cover up the fact that the down payment was coming from a home sale. And how they did it correct me if I'm wrong on this.
Sure.
It said all the subject tos, and that's where Julie and I learned, all this Mickey Mouse that we're going to hopefully help you guys to avoid learning the hard way like we did. So the lender's letter basically said, congratulations, Bob and Betty Brown are approved to buy the house, blah, 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 the normal Mickey Mouse, right? And then it was, all these good things. And then the second paragraph, it said subject to, verification of down payment, or subject to, I don't remember the exact language.
Pretty normal sounding stuff though.
Right. And we didn't think to really root into it. Remember, we never had this problem. So we figured smooth sailing. And after all, this was a very reputable agent. Well, it turns out that the down payment itself was coming from the sale of their home. So even though Delina wrote the offer not contingent of home sale, the lender's financing, or the down payment required to purchase the house, was contingent on the sale of the property. And the lender was hiding that home sale in the lender's letter, and we weren't smart enough at the time to actually root it out. And so that is what the genesis was of us creating the ultimate addendum. And so from there forward, and we're going to share you, obviously explain to you as many of the little deal points as we can. But from there forward, we never accepted a lender's letter that had not, even one that looked clean. We always made every single offer we ever received, especially on any of our listings, complete the ultimate addendum. And I know Julie you want to get to your notes, but just so I can make this point so I can understand how to use it.
Sure.
All right. So when we get an offer on a property and it was a great offer, all the things made sense, the seller wanted to accept it, lender's letter even looked good. Even when the lender's letter looked good, no subject tos or verifications of, or any of the little, lender speak. We still would send over the ultimate addendum. Yes, the seller accepts your offer. Thank you very much. Your closing date, everything looks good. Fantastic. We're going to see you guys in 30 days at closing. But, you have, 24 hours. Sometimes we'd give them 72 hours. Depends if it was over a weekend, to provide us a different lender's letter that shows that all the items on the ultimate addendum have been essentially verified or satisfied. And so what we were doing, and if it was a real lender's letter and the lender had actually done their job, it was no big deal, because the lender would just take our ultimate addendum and frankly cut and paste it and say all these things have been verified. But what we would discover is 9 times out of 10, well, I'd say 7 times out of 10, we discovered that the lender's letter that they actually sent over didn't actually do the 3-merge credit report, didn't actually verify the source of income, didn't verify all the things, even though the lender's letter stated that it did, it didn't. And we were then able to get clean lender's letters. And if the lender wasn't able to provide that buyer, and so here's what was fascinating. Well, anyway, if the lender wasn't able to provide that buyer with a clean letter, then obviously we would not accept the offer from that particular buyer because they couldn't, prove they could obtain financing. This would sometimes piss off the buyer's agent because we were proving that their lender letter from their buddy, Larry the lender, who they play golf with, was actually legitimate. But over time, what the market started to realize was we were actually doing the buyer agents a huge favor. They should have been doing it themselves. And we were proving that their buyers weren't able to obtain financing despite the lender's letters. You guys get it? So the buyer's agents themselves weren't knowing what questions to ask the lender to verify that their buyer was qualified to purchase. This should be something that will run a chill up your spine, especially if you're working with buyers, because you're going to realize that you probably are working with buyers that are unqualified or qualified when they originally filled out the application and met with the lender, but now they're not because lender overlays. Because
we're going to get into all that.
I know. Because of all the things that can happen. And so this is what matters most when you're listening to today's show, is you get the notes and then you absolutely apply it to all contracts, not just if you're on the seller side, but also if you're on the buyer side.
That's exactly right. And that is one of many, many, many stories. That one in particular that you shared with them, because I remember that very distinctly.
It was multiple transactions.
It was actually, I was going to say,
it was
way deeper than what you described.
It was 4 deep.
Yeah.
So that's what she's talking about. It was 4 deep. Her buyers were buying, not only were her buyers contingent, but the sellers of that house that we had listed were, if I remember correctly, they weren't buying one of our listings, but they were buying,
right. And at the time, those types of contingencies were relatively normal,
yeah.
right? But we had never lived through one that was tanking for that particular reason.
But
so
she knew that we wouldn't have accepted a home sale because it was a hot house.
This has become kind of a common thing. Yeah.
I know, but some of you guys listening right now, you're saying,
they've never heard of this before.
Oh, well, but I'll tell you right now, what some of them are listening and saying, shit, I can get somebody to accept a home sale contingency
I know.
and hide it in a finance letter. That is not the reason.
That is not what we're implying.
We're not trying
We're going to talk about all this.
Exactly. Go ahead, Julie.
Okay. All right. So that's one thing with pertains to a secret home sale. We're going to talk about several other issues. All of this comes down to the 11th hour call. We called this the secret strategy to prevent real estate closing chaos. Now, when does closing chaos usually happen? Usually it is at the 11th hour. It is because that's when they actually do underwriting. So let me kind of tee this up.
When you picked up your clothes at the dry cleaner, already arranged the babysitter,
Yeah.
decided to rearrange your entire day, and then you get the call saying the deal's not going to happen.
Yeah, that's awesome. Like the morning of, when you've got a 3:00 closing that day. Yeah. Some of you are going, I know. All right. So the ultimate addendum is, again, how to insure against 11th hour underwriting drama. What are the things that cause a deal to catch fire a few days or a few hours prior to closing? Tim just shared a story with you that is one of the number one things that can cause that. But what if there was a way to prevent those problems before it's too late? Well, let's start with that word I just used. What is underwriting? And I always loved, as I was thinking about this, Tim, I was remembering that, especially in our early career, there was no such thing as a transaction coordinator. We were just having to live through all these problems and figure this crap out, right? And then later, train the transaction coordinator how to do that. And the thing that drove me crazy, and it is true to this day, you can't talk to the mysterious underwriter. So let's talk about what underwriting actually is, because that's related to all the deal-killing drama.
But Julie, the ultimate addendum was created so that you wouldn't have to train anybody. It just became the static thing that every transaction has to have. And Julie and I, when we had a team, we had 7 buyer's agents. Some of you guys know Coach Rochelle, who works for us. She's our head coach. She was actually in charge of our buyer agent team, which is kind of funny to think about. She's been with us for over 20 years. But the point of it is that every single deal was required to have that ultimate addendum. When the buyer agents were meeting with the buyer for the first time, giving our buyer presentation and getting the exclusive signed, we used exclusives all the way back in the 90s. The ultimate addendum was sent over to the lender that they were claiming that they were going to work with, or the lender that we were helping them discover, would be the best fit for them. And they would always use the ultimate addendum as the framework for writing whatever lender's letter, because they knew Harris Family Team wasn't going to accept some BS lender's letter.
That's right. We created our own boilerplate, right?
We did.
Yeah. Okay, so we don't have to go through all of these, so you can slow me down if you want to, but deal killing drama, what are the top 10 things, you just mentioned probably the number one thing, that make you crazy when you thought you were about to have a closing? These are why you use the ultimate addendum. Again, that is part of Premier Coaching. Number one, the buyer hasn't even applied for the loan yet, so no one knows a thing about them until you're halfway through inspections. Yes, a lender will crank out a boilerplate, cut and paste lender letter. Might not say they're pre-approved, might just say they're pre-qualified, but they're going to give that buyer's agent something to send over with the offer.
So let me say something I know that'll piss lenders off. We have a lot of lenders that listen, is that you guys know, dear lender, that pre-approved and pre-qualified doesn't mean bunk. So let's just stop acting like they mean something, because pre-approved means one thing to one lender and pre-qualified to, means the same thing. It's just a big confusing jumble of words.
It all sounds official, though.
So lenders, if you're listening, I'm going to give you a little advanced, a suggestion here, because I know a lot of you guys are trying to figure out how to work with agents and get, essentially resale finance business opposed to just doing refinances all the time. So here's my suggestion. You get the ultimate addendum from us. You then basically show your buyers, the prospective buyer agency you want to get their buyer business. You show them essentially what the difference is between your lender's letter and everybody else. And you explain to them why it matters. And I promise you, any agent who's been in the business for more than a blank is going to immediately see the added value that you bring, because you're being that much more thorough and you're taking the time. And I'll also suggest this to you, dear Larry, Larry the lender,
yes,
that you also explain to this prospective agents that you want to get their resale, finance business from, that you are not just going to send out a BS letter off your iPhone. You're going to actually call the buyer. You're going to actually do the 3 merge. You're actually going to do the verifications. You're actually going to do the work. You're not just going to wait. I know you're stepping over your points, but I'm saving you time. You're not just going to wait until the house is in contract, then do all the actual work that you should have done in the first place. If you want to really differentiate yourself in the eyes of agents, I'm telling you right now, Julie and I have one of the largest coaching and training organizations for real estate agents in the world. And we always harp on this point. And lenders, if you really want to make yourself special, you maybe want to heed my advice.
Yes, it's a great, unique selling proposition for a lender, isn't it? Okay, so number 2, and again, these are all things that will absolutely wreck your 11th hour underwriting right prior to closing. Number 2, the buyer had great credit and ratios when they applied, but you find out 3 days prior or 3 hours prior to closing that they just bought a new boat, a new car, a new rental property, etc., thus screwing up their credit and ratios. That happens. Okay, so what prevents that? Underwriting is when all the work gets done, right? So with the addendum, you're forcing these checks to happen. Number 3, you already mentioned. Number 4, the buyer's down payment hasn't been verified. Is it coming from gift money or a divorce settlement? Maybe there isn't a home sale contingency, but it's coming from somewhere else. We had learned this when a lot was secretly contingent. They were planning on selling a piece of land, and at the time, land was hard to sell, but that's where the down payment was supposed to come from.
Actually, the better stories are, Julie, and this both happened in Julie and I's first year in the business. Remember, our first year in the business, we sold over 100 homes, and we did work 50% buyers, 50% sellers. A lot of our sellers ended up being buyers. You guys can follow the logic here. So there's 2 deals that we had in contract with buyers. This is before we knew what we're educating you guys on now. And we got this Mickey Mouse lender's letter, and of course, the lender hadn't actually done anything. Well, we had these were not related, but it happened in the first 12 months. One of the buyers' financing was contingent, and I'm not making either one of these examples up because they're such funny stories. Not funny at the time, though. I appreciate.
No, it wasn't.
Not funny at the time. So the first one was they had to sell their beer can collection.
Yeah.
Yes, that's a thing.
That's a thing.
They had a beer can collection that evidently they were waiting. The buyer actually said, I'm waiting to basically go on contract because I wanted to make sure I could find a house I like. And now I'm going to sell my beer can collection. And of course, there was no plan to sell the beer can collection. And of course, the deal died. And of course, I felt like a fool. That was a buyer I was working with personally. But that's not as well. That's worse than the second example. The second example was same thing. Sent him to Larry the lender. Larry, this guy's good to go. Blah, 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 blah. Go out and show him houses, put him in contract, let him know when he's in contract, and I'll get the rest of the verifications done. Okay. Did all that, got him in contract. And then it turns out I get a call from Larry, and Larry goes, the guy's name wasn't Larry, by the way. Anyway, Larry called me and he goes, he's not going to be able to get financing. Why? I mean, the guy had a job. He had decent credit, all the things. It's because the down payment was coming from the sale of a Persian rug in Iran. that was where his money was coming from. He had to wait for some family member to sell some, I'm sure, absolutely gorgeous Persian rug over in Iran and then wire them the money for the down payment. And that deal died too.
Yes.
Now, I do think, actually, now I'm thinking about that as I tell the story, I think that guy came back like 6 months or 12 months later and did buy a house.
Yeah, I mean, it does happen sometimes. But
After the
here's
rug-
the thing. The buyer process, as we teach you in Premier Coaching, but hopefully that everyone is following, does not go like this. Find house, then figure out financing. No.
Right.
That's the wrong order.
Yeah.
We had one where it was contingent on the grandma had said that she would sell her piano to create the down payment and give that to her grandkid, but it hadn't happened yet.
Julie, this is, again, why do lenders operate like this? And I actually understand why they operate like this.
Me
Because
too.
doing all the work to get somebody approved for a loan, it takes hours sometimes. You have to meet with them and talk to them, explain all these things, and you have to get them to sign the
That's
forms.
called processing.
And you have to do all the things, and then they have to be willing to get the verifications done. Maybe they have to get explain what this issue with their credit was. It's going to be some work, and then the lender could completely have wasted their time if that buyer just changes their mind, decides not to buy, or the lender now that buyer knowing that they're approved. They could just go and work with another lender, right? So the lender is trying to push their risk of losing time, and there might be hard costs associated with all that work as well. They're trying to mitigate it by waiting for the buyer to be in contract, because when the buyer's in contract on something, they're going to be anxious to get the financing done and anxious then and be more urgent with getting the paperwork and the formage done. So that's the reason that most lenders are trained not to do anything other than cursory checks on somebody's ability to purchase something until the deal's actually in contract. In other words, you guys are being sent out there to waste your time on what could very well be very unqualified buyers based on half, if you're lucky, information about their ability to purchase. Again, if you're not clear on that, please don't find out the hard way. I just told you the truth. By the way, if you love today's podcast, and I know you do, please do consider becoming a member of Premier Coaching. So we're going over the ultimate addendum. We're not going to give you the actual legal form. We're not going to, on the podcast. It takes too long. It's all that legal language stuff. Anyway, that's included in Premier Coaching. If you've not yet joined Premier Coaching yet, what are you waiting for? Just go to premiercoaching.com or just click the link below. And the big announcement that we're going to be having a training event around Premier Coaching sometime the next 2 weeks. And a lot of you guys have been waiting on pins and needles and asking us about ethical real estate professional. And I did mention this a couple weeks ago. We are going to be including the ethical real estate professional designation for agents that have completed Premier Coaching. It's not going to cost you any extra. Originally, this was going to be a standalone product, but we decided to really make it so that you guys in Premier Coaching got full benefit of it. So if have you been in Premier Coaching before and you're wanting to get back into Premier Coaching because you want to have the ethical real estate professional designation, just go to premiercoaching.com. And that's the easy path. And remember, 30 days free access to Premier Coaching, and that does include a daily semi-private coaching call. So just go to premiercoaching.com or click the link below.
All right, very well said and reminded. All right, number 6, we talked about previously. Number 7, the buyer's employment wasn't actually verified when they wrote the offer and they got themselves in contract. They are either underemployed, unemployed, self-employed, or otherwise challenging to get approved based on their employment. They may also have further difficulties like being too short on their job history or having an unrelated job history.
Talk about what's happening in all
Yes.
these areas where there's a high concentration of government workers, and it's not just Northern Virginia and D.C. We see
It's
this
everywhere.
It's everywhere. Go ahead.
Yeah, that's right. So there is now new risk involved in approving people whose jobs might be subject to downsizing, getting fired, doing an early retirement, otherwise no longer being employed.
Or get this, guys, and this is something that's going to be expansive if it's adjacent. So let's say, for example, there's a lot of Haverford nuclear power plant. In what town in Washington State?
I don't remember the name of the town, but
Kennewick.
Tri-Cities near Kennewick, Washington.
So
Yeah.
we have,
State.
you guys will know Lance and Karen Kenmore. They've been with us forever. They sell 400 to 500 homes per year. And a lot of the homes that he's been selling over the years have been people that have been working for the Haverford nuclear power plant as far as cleaning it up and do all these other things. It was like a 30-year, I think, government contract. Well, I doubt if that's going to have any downsizing issues because it's not like nuclear waste won't always need cleaned up, but here nor there.
Sure.
So it's not just the actual people working for the actual government doing the actual contract. It's all the other businesses that are essentially serving those people that work in that particular community for that particular employer. And it could be everything from, restaurants. It could be, builders. It could be anything where the lender actually thinks that person who's applying for the loan works in this particular community where the major employer, it might be subject to essentially having a massive employment reductions.
It falls into the category of a certain type of employment.
Exactly. And so what you hear when Julie and I say overlay, what the lenders are doing is they're doing the right thing to protect their own asses. An overlay is not a bad thing. They're just mitigating more of their risk. So when you go to Fannie and Freddie's website, it'll say, these are the requirements to obtain a loan. Or you just call Larry the lender, and Larry will say, yep, you got good enough credit. You've got done. Based on Fannie Freddie, you should be able to obtain a loan. What he's not telling you is that the overlays are something that's because of the nature of the employment that particular person has, or they're adjacent to, like I just described, they're going to have additional standards that they're going to have to meet. So let's say normally to obtain this particular 30-year fixed rate mortgage, you needed a credit score of, 700, let's just say. Now, because you happen to work for the government and you are in the crosshairs of DOGE, you might actually need a credit score of 725. Before you were good with 10% down. Now they're going to insist you have 20% down.
Or because you are in that employment category, you now need 15% down, or maybe your ratios need to change. They can say all of that. Now, this is not without precedent. When the housing crash happened, there was a lender overlay that affected anybody who was related to that. That also happened during COVID with hospitality.
Let me tell you guys a story. So I am standing in our driveway, and I walk out of the driveway, and my neighbor's name is also named Tim, and he said something to me. It kind of caught me off guard. He said, "Did Countrywide?" This is what he said. We didn't have a loan through Countrywide, by the way, which made it really weird. He said, "Did Countrywide reduce your line of credit?" So not only did we not have a loan through Countrywide, but we also didn't have a line of credit.
But a lot of people did, so he assumed that.
Exactly.
Yeah.
Like all the neighbors on the street
Everybody.
did.
It was a thing.
Because one of the neighbors across the street, oh my gosh, his name was Larry.
I know.
I just remembered that.
I know. I'm pretty sure that's where you got that.
Oh, that's
nickname.
hilarious. That dude's name was Larry. He was the lender. Oh my God.
I was waiting for you to make that discovery.
Had you already thought about that?
Yeah, I'm pretty sure
That
that's
is freaking hilarious.
why it's in your head.
His name was Larry. He was a lender, and he was a bit of a liar.
I know.
Wow, that's been in my subconscious mind to this very moment.
Yeah. Sorry, listeners, that you had to experience that.
Oh, anyway. So, yes, Tim came out and he said that my line of credit had been reduced. And I said, frankly, I'd never heard of it.
What's that mean? Yeah.
Yeah. So he had a line of credit against his own house, and it was for hundreds of thousands of dollars. He had quit his job as an appraiser. Do you remember this?
Yep.
He quit his job as an appraiser, and him and his wife were just doing flips. That's what they were doing. Why not, right? So they were using their line of credit to do flips, and they had done really well on a few flips too. So go them.
This is right before the housing crash.
Exactly. And so, it was right as after a New Century filled. It was the late 2007.
Right on the edge, yes.
Yep. And so Countrywide saw that happening, and so I think this guy had a credit line of like $500,000 or $600,000. Yeah. And he said but his total balance he had, or the money, so he had a $600,000 credit line, but he'd only used like 60,000 of it. You guys following me on this? And so what the lender did, what Countrywide did, is they reduced his line of credit to 60,000. So he couldn't borrow any more against it. So even though he had air quoting 600,000 on his credit line, they were capping the amount he could borrow to $60,000.
They froze it at what he owed.
Exactly.
Yeah.
And then Julie and I are like, what? And then we saw that happening across the industry. It happened in Nevada, Southern California. If you guys were in the real estate business back then, you remember in those markets in particular, you know what I'm talking about. So all these agents who had this, nice credit lines because they had great equity in their homes, and they were going to use those credit lines, in case of emergency kind of thing. All of them had those credit lines completely eviscerated, literally within like a month. And Countrywide was moving like wildfire. It happened like less than a week.
Yeah.
Because what Countrywide wanted to have this done is they were in stealth mode, reducing people's credit lines. They were reducing them, and then they were notifying them, because they didn't want people in the real estate industry who they were assuming were going to be, because a lot of the loans at that time in those price ranges were subprime. And again, we saw coaching clients with this problem, and all those deals were falling out of contract. And so what the lender was trying to do is block those agents and brokers and a whole bunch of other people in the real estate adjacent space.
In Tim's case, a flipper.
And from maxing out their credit line.
Yep.
So he could have just gone and maxed out the credit line for $600,000 and had $600,000 that he could have then had possession
And
of.
some people did until that happened.
They totally did.
Yeah. Okay. So that goes to your point. Risk management.
Right.
Countrywide saw this as too much risk on their books. They saw an avalanche of things starting to happen.
But that's in essence, that's an elaborate version of what an overlay is.
Yes.
And so the lenders, that's perfectly legal for them to do that.
Yes, that's true.
There's nothing wrong with them doing that. They're
Agents argue online to the death that there's something illegal about this, but it's not.
There's not. And furthermore, if you were the lender and you had a bunch of loans out with a bunch of credit lines and you thought there was a lot of good chance that those people were not going to be able to make the credit line payments, maybe worst case scenario, there may have actually been some depreciation, that the lenders didn't know what the hell was going on. So moral of the story is not illegal, perfectly fine to do it. Read your contract. And so when you're dealing with a lender or you're dealing with a buyer, getting back to Julie's points, you're dealing with a buyer and they're working for the government, frankly, or any of these other types of industries.
Or even a tenant.
Or if the lenders even think there's a whisper that that market might be, or that particular job category might be on the decline, they're going to put overlays. And I'm give you the advanced story about, the credit lines for your own reasoning, and in case you're in a situation like that yourself, or maybe a family member is.
Now, that does not necessarily mean that borrower, say they're in contract on your listing and they work for the government. That does not necessarily mean that they will not get their approval. The point of the ultimate addendum is to get through these issues earlier in the transaction to essentially force the lender to put that borrower through underwriting, or in some cases to simply finish underwriting. So that if you find out, because you went into it saying, okay, this person has a job, okay, that's usually as far as people get. They didn't say, who do they work for? Whoever asks that, right? You don't get to see that as a listing agent. They have a job. They have adequate credit. Their ratios look okay. They don't seem contingent on anything. So you would believe rightly that should be a deal that sails through until you get a call from underwriting saying, well, all of that's true. They do have good credit. They have good ratios. Everything else is in alignment. But they work for this government entity that's just seen 10,000 jobs downsized, and we're not sure that they're going to have employment. So it's not that we're not going to approve them, but we're going to ask for 30% down instead of 10% down. Or we are going to ask them to pay off this credit card that normally wouldn't have bothered them to make their ratios even better. Or maybe both of those things, which means that you, listing agent, will have time to deal with this. You decide whether you're going to extend it and give them more time to fix this and to come up with a higher down payment, say, or maybe you've got a backup offer, or maybe it's a hot property and you're going to say, I'm sorry, you didn't make it through your loan contingencies. You didn't, provide the ultimate addendum result. So we're going to put it back on the market. You can come back at us once you have actual loan commitment.
By the way, people can hide all kind of sneaky crap in, paying cash letters too. So, if someone claims they're paying cash,
hasn't been verified,
and you're supposed to get a lender from the bank manager verifying the money that's in the account, but you don't realize that, where that money is coming from or the nature of that money. So we also teach you how to do this in Premier Coaching. You want to know if those funds are seasoned, how long it's been in there, the whole thing. You just have to be super careful during times like this. And there's going to be, the nature of housing in general is that there's going to be lots, especially, frankly, during the government is going to go through a big downsizing. This has happened, just as an aside, this has happened twice before, maybe 3 times before in the last 100 years or so. Isn't that right? Mm-hmm. Yeah, where the government essentially has had another version of Doge that's gone in there and looked for, silly things that, frankly, people allowed to have happen to taxpayer dollars.
That we'll talk about on Friday, probably.
Yeah, we're going to talk about it on Friday. I mean, it turns out that there's how many people that were on the Social Security Administration's website that were over 116 years old that are still receiving
hundreds of thousands.
Yeah, hundreds of thousands. I think I read 300,000 people that they've discovered so far that were receiving Social Security benefits, even though they, obviously they're over 116 years old was the actual age. And now the Social Security Administration is saying, well, no, that was just a classification that we had in the, I'm not going to talk about it, right? But that was just a classification we had in our, did you hear this part? In our 1960 software program.
I know.
Okay. And so that's, they weren't actually, sending out $300,000 or weren't sending out Social Security benefits to 300,000 plus people. That was just a class. Okay. Well, guess what? All they're going to have to do, and they're already starting to do this, is follow the money, and they're going to see that indeed the money was being sent.
It went somewhere.
And where'd the money go? Who'd the money go to? And it's not like Julie and I don't have empathy and sympathy for the government employees that are stuck in this quagmire, because that's really what it is. I mean, probably people working at Social Security Administration didn't know what a mosh pit it was going to be when they took their jobs there. And they're probably helpless to really make any meaningful change. I mean, did you guys hear where the paperwork of retired government employees was being stored? Did you see the video? I don't know if you guys saw it.
It's in I can't remember a limestone or a lime mine.
Yeah,
okay?
A lime mine.
Under the ground, like the deepest, weirdest basement made out of caves, okay? I'll talk more about it on the Friday show because the story of it is just unbelievable. But yeah, that's a real thing. And the reason that they can't downsize more than 10,000 jobs, I think it's a month, is because, literally, you cannot make this up, is because that's how long it takes to process literally paperwork.
It's the elevator.
Hard copy files that have to go down a very slow elevator, very, very deep in the ground, and then be processed under the ground into the file system in the caves. And then we get to do another 10,000 same slow way. It was
a system that was made in the 1950s, which you got to wonder in the last, 100 years, basically, 70, haven't they discovered something, these little things called computers?
Well, they have tried to digitize it.
Yeah.
But for whatever reason, because it's so much paperwork, they haven't been able to get that done. But there's a very interesting story that I'll tell on Friday about this.
Yeah, do. But anyway, the moral of the story is you're going to maybe have people that are in the business of running the mine. And maybe now they're thinking they're trying to get a loan on a new house, and they discover that, turns out the mine might be replaced by a computer from the 1980s. Exactly.
Just saying.
Maybe someone's going to start taking, digital pictures and sticking them in, the cloud, and not having to put them in a box and sending them down. The limiting factor, this is what Elon said, the limiting factor was how fast the actual elevator can go. And it can only take so many round trips every single day. And there's only so many boxes that can fit on each elevator. And that's a limiting factor to the fact they can only 10,000 government employees can retire per month.
It's just astonishing. Okay. That was a rabbit hole we went down. Okay.
Yeah.
Well, let's go back, and then we're not going to go through all of this, but I think hopefully we have impressed upon you that there is a reason that you get that dreaded call before closing, that what you thought was going to close tomorrow or after the weekend on Monday isn't going to close because fill in the blank with all of these issues. And I haven't even gone through all of them. Many of you who are experienced in listening can tell your own horror stories. And we could go on for podcast after podcast, but we won't, about those stories. So here's the thing. Your mission, using the ultimate addendum that you will have in Premier Coaching, that you do have Premier Coaching clients, is to force the buyer's lender, whether that's your buyer or the other agent's buyer, to get approval, loan commitment, well before the week of closing, and not wait until days or hours before, and not force an extension or a dead deal, okay? Most agents give up when they get that terrible call. Things to consider, and we'll go through this quickly because I think we're running out of time here. Cultural practices, okay? If you live in a market where 90% of your deals are cash, modify as necessary. Find out where the cash is coming from. If you're in a military market, farm, ranch, condo, etc., modify based on your own closing challenges. Make a list of everything we didn't mention today and build them into your own ultimate addendum. You get our ultimate addendum in Premier Coaching, but you can modify it and change it as necessary.
Let me drop this in, okay? Again, this is just something I felt perplexed.
Sure.
I'm just considering that you guys would benefit from right away. The reason that all cash, like when you get an all cash lender's letter, what's the source of the lender's letter? And if it happens to be, and this is going to be where you're going to really have to do some work, and we teach you guys how to do this in Premier Coaching.
You mean the proof of funds letter?
The proof of funds letter, sorry. Yeah, the proof of funds letter proving that the person has all cash. Thank you. So what could very well be happening is they're borrowing against essentially the equity, against their equities. So if you have, say, for example, $1 million or $500,000 or $5 million or $50 million, doesn't matter. Most of those securities that you have, and I'm talking about stock and things like that. Not everything in an investment portfolio will qualify, but usually it's quite a bit. You can actually borrow money against that equity And you can, usually it's a very preferential rate. So if you guys have a bunch of money in the market, you probably can actually put yourself in a position where you can borrow money at very low rates, but here's the downside. You're using your securities, your stock as collateral for the loan. And if that stock goes down, what they'll do is they basically will seize the stock and they'll essentially call the loan. So if you have somebody that's providing a lender, I'm oversimplifying it, but this is the gist of it. So if they're saying, I have cash to pay the house, but you notice the lender is coming from, I don't know, Ameritrade or Charles Schwab or something like that, there's a really good chance. What they're doing is they're showing you the available cash in essence what amounts to a credit line against their existing securities. And that line could be eviscerated if essentially the stock that they have goes down in value. That's not going to be a proof of funds letter that you should be accepting. That's a garbage letter. Now, the best way to make it so that you don't have that downside risk is if you accept an offer, the person says it's proof of funds, here's my cash. That cash needs to be transferred and to put into an account that's going to not be something that, for example, if the stock value goes down, that's collateralizing that actual cash that your borrower's going to flake out. You guys get it?
Yeah.
So when you get some of these lenders' letters, even if they sound strong, even if they come from great buyer's agents, don't assume the buyer's agents actually did the drill down and really validated whether that was a real legit proof of funds letter. And do some homework on this and really protect yourselves. Again, times like this, there's going to be a lot of flakiness that happens, especially this time of year. So use our ultimate addendum to save your ass. And if you're a lender, I use this as a USP, unique selling proposition, to get agents and brokers to work with you. If you're if you're an agent, you can obviously use our ultimate addendum to try to press upon the buyer or the seller how professional you are and the different level you're going to go to prove your value. That's all the little things that we teach you guys in Premier Coaching.
Exactly. Okay, now, little tiny disclaimer, there are a few states, Texas is one of them, I think there's 3 or 4 states that have a version of this already done by their compliance, and in those states, you're not allowed to make your own addendums. So that's not very many, and you probably know if you're in one of those states. Texas is most
Julie, let's
notable.
wrap because I have got to get on a podcast.
Okay, they can get the notes, they can get some sample wording, but the real addendum that you can use, that you can modify as part of Premier Coaching, along with, I think sometimes when we say you get a daily coaching call, what we mean is every weekday you get a daily semi-private coaching call where you can ask questions about this and you can learn how to use it.
So we're over time by like 11 minutes, but Julie's next section that she was going to read to you guys was called Addendum A. It was a part of the Ultimate Addendum. If you guys want the Ultimate Addendum, go to harrisrealestatedaily.com and definitely subscribe. It doesn't cost you anything. The Ultimate Addendum will be published today. So along with today's podcast, so make sure you jump on that right away. This is something every single one of you should make as a normal part of every transaction you do here for the rest of your real estate career. Guys, thank you. We're at 0.05% of all podcasts in the world. In our section, on iTunes, we're routinely one of the top 50 podcasts. So that is because of frankly, your support. And we're hopefully making a continued improving difference in your business and personal lives. Thank you for all the 5-star reviews. Thank you for, allowing Julie and I, frankly, to be in alignment with our highest and truest purpose, which is to be of service to all of you. Your highest and truest purpose as a real estate professional is to be of service to your buyers and sellers. And hopefully from listening to today's podcast today, you've gotten a lot of ideas on how you can actually up your game and you can actually be of service at a level maybe you hadn't even considered before. Have a fantastic day. We'll talk with you on the show tomorrow.